Jim Roger joins us now. Let's take a conversation forward. Jim, good morning. Thank you for joining us. Jim, this has been an exciting year. Best of the bulls at the beginning of the year would have not predicted this kind of a comeback in commodities or equities, or for that matter, Bitcoin or any other asset class.
Well, yes. I mean, whether you're in India or America or anywhere, it's been an exciting year. Markets everywhere have been going up and down a lot. You mentioned Bitcoin and cryptocurrencies. That's been a phenomenal movement for people who were involved either way. I have no involvement with cryptocurrencies, but I am involved with commodities. I own a lot of commodities, but I own a lot of things. I just wanted to say one thing quickly. I have not sold anything this year, and I have not sold anything short. So I don't think this has ended yet.
Why have you not sold anything? Since you own a lot of commodities, higher commodity prices means higher inflation. Higher inflation is something which is going to put a sweat on the brow for all the central bankers. No central banker wants inflation to go up beyond a point, which is they will do whatever it takes to control commodity prices.
Well, first of all, there are very few central bankers in the world who know what they were doing. India had one of the best a few years ago. He's gone now, but there have not been very many smart central bankers ever anywhere in history. So please don't believe they know what they're doing. They have been printing a lot of money all over the world. They have been buying assets all over the world. And throughout history, that has led to inflation. Now, they keep telling us there will not be inflation, or there will be not very long. They just don't know what they're doing. There's going to be more inflation. You know it's here. And things like silver and gold have always been a way to protect yourself from inflation. But there are other ways, commodities too.
Jim, I want to go back to that point again where you said you've not sold anything. Why have you not sold anything?
Well, I don't think that the exuberance is over yet. All of these guys continue to print money. And what will happen when things get bad, when the markets go down for a while, they will panic and they will print more money. They don't want to lose their jobs. They will do whatever it takes to keep their jobs. It's not good for you and me. It's not good for the world. But they don't care about you and me. They care about their jobs. So when things start getting soft or going down, they will print more money. And we'll have a big rally. That will probably be the last rally. That will probably be when I sell. But who knows? I will watch ET to find out what to do.
Jim, you've always endorsed our association, so I really appreciate that. Jim, my next question is that even though you're making a case and you've made a case that, look, central bankers are just printing and printing more money. Ultimately, printing of money will lead to an asset bubble. Why is that you're not going short also?
It's always led to an asset bubble throughout history. Why is that trouble? Because when things get wildly overpriced, a lot of new people come pouring into markets, inexperienced people. They get excited and exuberant, and then when the bubble pops, and it always pops, a lot of people lose a lot of money. I hope I'm not one of them, but I know it's going to pop someday. I know a lot of people are going to suffer. I hope I'm not one of those people.
What would be that turning point or a data point or factors which you're observing which will convince you to either sell or to go short?
Well, I don't know. It really depends. It's usually different. You just start having bankruptcies in small places or whatever. And when I was younger in the investment business in America, there was a rule that when the central bank, the Federal Reserve, raised interest rates 3 times, that was it. Not the first time, not the second time, but the third time. That was the sign to get out. I don't know if and when they raise interest rates 3 times. I will be very, very worried because I've been around a long time.
Working with a template, that tapering will come, which will be followed by a rate hike. The debate is whether it is June or July or August. The general consensus is that in 2022, rates will start going higher. Given that markets have 6-8 months to adjust to the first big rate hike, do you think markets would adjust accordingly and the impact of the rate hike would be nullified?
Well, if you look back at markets anywhere, in the last phase, whether it's the last 6 months or the last few months, a year, some really crazy things have happened. You look back at the end of the 90s, the whole index like doubled in 6 months at the end. And it's always that way. People get really excited and exuberant and they see things going up. They don't want to miss it. They want to jump in. And you have really wild, crazy moves. In America, we sometimes call it a blow-off. The market blows off. It goes up so far, so fast. So I would expect that is going to happen again. It has often happened in markets, and it will probably happen again when they start printing again. Because then, see, when things get bad and the central bank comes riding in and prints more money, everybody says, oh, we don't ever have to worry. The central bank will protect us. That's when you get really, really worried.
Jim, I'm not getting into why Chinese are doing what they're doing, but let's understand the impact of what China is doing. If the Chinese government maintain this policy of where they want to slow down the economy, where they maintain a policy, if they want to continue to have a tight leash over fintech and other sectors, especially in the internet space, what implications do you think it will have, A, for rest of the world, and B, for investors who up until now have invested in China are now really getting worried about their investments and are saying that, look, should we switch out of China?
Well, every country in the world wants to have strict control over its industries, whether it's India and agriculture or America, everybody. That's the way politicians are. I don't like it, but who cares? That's the way they are. China has been trying to slow down property, as you know, and in my view, that is correct for them to do that. Property got wildly overpriced, a huge bubble in many Chinese cities. And in my view, they're doing the right thing to try to calm it down. Now, can they control it, or does it turn into a huge collapse? I don't know. Most governments in history have not been able to control when they try to slow things down, and it gets out of control. I still own Chinese shares. I bought a few recently, not many, but a few. I am not selling out of China, although I don't own property in China. I do suspect that China will continue to try to calm property because it got into a wild bubble.
Jim, there seems to be popular belief here in India that there is a froth/exuberance in the new age digital companies. Many of them have IPO'd in the last 3 or 6 months or so, and one has seen quite a bit of tizzy in terms of their valuation. While, that subject aside, just wanted to understand what is it that you're making of this entire fad which is emerging for digital assets. I was just reading the other day that there has been a £2.5 million auction for a digital real estate. Not just that, we all know that the NFT fad as well is very fast catching up. This amidst news that India is looking at presenting a crypto bill on whether or not to legalize crypto assets, or whether India is going to have its own sovereign digital currency or not, which is going to be tabled in the parliament shortly.
Well, as I said, there are always new things coming in any market when it goes up for a while, and that's what's happening now. In the late 60s, in the American market, for instance, at one point, anything that said computer in its title did well. There was a laundry that changed its name to something laundry or something computer. And the stock went crazy for a long time. And that's what we're having now, the cryptocurrencies, the NFT. My wife is involved with NFTs. Many people get involved with these things. But that's the way all markets work. When you come towards the end a lot of new people come, a lot of new instruments come, a lot of new ways to get rich come. You know, SPACs, you see SPACs are coming again. Well, SPACs have been around for 300 years. And every time, not every time, but nearly every time a market goes up for a long time, SPACs come back. Well, here we have SPACs again. These are all signs of things that have happened before, and they will happen again the next time we have a bull market. And either good or bad, I've been around long enough and I've read enough to know that these things always happen towards the end of a bull market. I don't see the end yet, but I mean, who knows? Maybe it is the end. But these things happen near the end of any bull market.
Jim, the dollar index is already nearing the 96 mark. We already know what's going to happen with taper, and it seems like, at least for now, it's well in the price, and the markets have absorbed all the news flow from the Fed well. But now with this new variant, which is found in South Africa, and there are cases emerging, Europe is already in the midst of a third wave, and a lot of lockdowns as well are happening. Do you think taper would get pushed back, perhaps?
Well, as I said before, when things start looking shaky for a while, the central bankers panic, and they will do everything they can to save the bubble, save the bull market, save prosperity. So yes, if something causes the markets to go down, whether it's a new virus or whatever, they will get scared and they will do something to save us all. And you mentioned the US dollar. I've told you before, I own the US dollar because when things get bad, people look for a safe haven, and many people think the US dollar is a safe haven. It's not, but for historic reasons, people think the US dollar is a safe haven, so I own it.
Rollover from 2021 to 2022, what would be your favorite trade for the coming year?
I don't know. I've told you before, watch ET. And by the way, yes, I said nice things about ET, but I want to remind you, the first time I went to India, I discovered Economic Times, and I could not believe what a good newspaper that was. And now the TV is just as good. So I'm not being nice to you. Somebody there has done a very, very good job. The best trade for 2021, probably agriculture. Probably agriculture.
So you feel that the uptick what we've seen in prices of soy or wheat or corn or sugar, that's here to stay?
Yes, these things have gone up, but remember, that's sugar we've talked about before. Sugar's still down 70% from its all-time high. That's not a bubble. When anything is down 70% from its all-time high, that's certainly not overpriced. Now, maybe my timing is wrong, but I still prefer agriculture to nearly anything.
What about supply dynamics, Jim? The world is getting globalized. It is getting far more efficient to grow and cultivate crops versus what it was, let's say, 15 years ago, 20 years ago. Do you see supply dynamics changing very rapidly, which could have an impact on agri prices or, for that matter, other commodity prices?
No, of course, but supply is being affected by the virus too. You know, it's harder and harder to get workers. Let's use America to be neutral. It's very hard to get farm workers now for many reasons. Partially because many countries are turning inward against immigrants, and also because when people get sick, they cannot work. So, no, the supply is a huge problem eventually, and that's one reason, in my view, that commodities will continue to go higher.
Will it be silver and gold from here, or will it be silver or gold for you from here?
I own some silver and I own some gold. You never know when you're going to need some silver or some gold. And at the moment, I'm not buying either at the moment, but if I were buying them right now, I'd buy a lot more silver than gold because silver's down a lot. Silver's down 60 or 70% from its all-time high. I mean, things that are down 60% from their all-time high are certainly not overpriced, and they might be cheap. I should ask ET, China, India is one of the great silver countries of the world, one of the great gold countries of the world. I think you probably own more gold and more silver than any country in the world. I should ask you what to do.
Watch ETNOW, Jim. That's a retort to that. Okay, but that aside, while you've talked about the base metal as well as the agri-construct, what happens to globally linked sectors such as metals? We've had a great run year to date, but do you think that trade is now getting peaked out or is going to get challenged? Base metals, that is.
I understand. Well, it looks as though we're all going to have electric vehicles more and more. That seems to be the trend. And electric cars, for instance, use several times more copper than does a regular car. It uses lithium, it uses lead, it uses many more times regular cars. And if that's correct, if we're going to have electric vehicles and electric everything, that means more demand for base metal. And it's certainly at a time when nobody's been opening copper mines for the last several years for many reasons, partly the price. So if we're all going to have electric cars and trucks and lorries, it looks like we will, then the demand for base metals is going to go higher at a time when there's not been a lot of new supply. And we won't have many mines being opened because of the virus.
Sure. Jim, in your observation, aside of the point that you just made about EVs, what could be the businesses of the future?
Copper. Anything that goes into an electric vehicle, and I'm certainly not an engineer, so I'm probably not the one to ask, but anything that goes into electric vehicles is going to be a great market in the future, whether we like it or not. And there are many people who don't want electric vehicles, but it doesn't matter. They're coming. So go out, go to an electric vehicle dealer and start asking a few questions. I've already told you, base metals, lead and copper and things, there are a lot of that in electric vehicles. It's going to have a great future. I don't know if the electric vehicle car companies themselves will be great, but certainly the stuff that goes into electric vehicles will be great.
How do you think, Jim, history will remember the richest man on this planet, or the current richest man on the planet, Elon Musk? Inventor, disruptor, or someone who's very good at marketing and got rich because of storytelling?
Well, again, look at history. Always, after long bull markets, new heroes emerge, new geniuses emerge. And I have no idea whether Mr. Musk is a genius or not. So far, he's done a very, very, very good job of promoting and publicity and getting the stock up. He doesn't really make a lot of money making cars, but he does find other ways to make money. And so, but we will know. This happens every time. It's not the first time I've seen this movie. There are always new geniuses and new heroes. Most of them do not last when bear markets come, but we will see.
Jim, closing comments, and you said that before the bull market ends, the last leg is always the most exciting phase, because that's the wild phase. That's the phase where money is made, gains are accumulated, and you don't need somebody's advice to make money. In fact, you reach a stage where you start giving advice to everybody. Aren't we there yet? Because suddenly money making has been easy. Suddenly the frenzy is okay. One tweet from a promoter, the stock goes up 10%. Another tweet from another promoter, the stock goes by 5%.
People call their friends and say, I have discovered something called the stock market. It is fun, it is easy, and you can make a lot of money. And then they call their friends and everybody. And when you go to the dentist, you go to the dentist to have something done to your teeth, and the receptionist says to you, let's talk about the stock market. That's what happens. Everybody gets excited. New people come in. I mean, I don't like saying it, but it happens every time. It always has. And in the end, a lot of people lose a lot of money and they say, I will never invest in the stock market again. But then after a few years, it happens again. It's happened over and over for hundreds of years.
Just
We're
to wrap
all
it,
here.
just to
We're
wrap it
all
up,
here.
right, sir? Just to wrap it up from our side with one final question, and perhaps I'm just trying to summarize our today's interaction. At the current juncture, do you think global financial markets, are they overpriced? Are they in a euphoric territory, or are they in a bubble territory? Because if they're overpriced, we will see a correction. If they're in a euphoric territory, then we will see a crash. But if they are in a bubble, sir, then we will see a meltdown.
Well, I'm going to use the American market because it's a little more neutral. I don't want to make any enemies. In the American market, many things are Amazon, Apple, they go up every day. They're wildly expensive. But if you look at the American market, there are many stocks that have not gone up a lot. Many stocks are still sort of sitting there, not at their lows, but they haven't boomed like Apple and Amazon and Google and things. So parts of the world market, if you look at Samsung, you look at some of the Japanese stocks, they go up every day. They are in bubbles, but not everything. The reason I'm not selling yet is because I can see that there are a lot of stocks still that haven't skyrocketed. When everything skyrockets, then oh, we're getting very close to the top, and maybe I should get out.
Well, Jim, I can hear that somebody is trying to reach you, the doorbell and the phone ring. So I know we've extended our appointment with you today. So really appreciate your time. Thank you for joining us, and namaste once again from India.
Thank you very much. My daughter trying to call me. After I finish with ETNOW, I will answer my daughter on the phone. Thank you. It's always fun at ETNOW.